Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalajian, and welcome to the Bull, the Bear, and the Ugly. Wow, you talk about volatility. The S&P futures and the NASDAQ futures are moving hundreds of points per day. I told you this week you're going to see a lot of volatility. Yesterday, we saw the move down, and then we saw the steady rise up. Today, S&P futures, great patterns all across the board, and I can't wait to show you. And we saw the S&P futures trade as high as the 58.20 and then hit the low of 57.20. They're moving in the last hour and 20 minutes. I can't even tell you, up 48, down 43, up 25, down 30. I can't wait to show you. But the volatility is here, and you got to learn and be the ones to learn from me to how to trade this in this type of market. Remember, you must apply putting stop orders in, but the patterns were just unbelievable. The divergence patterns, I told you that all my strategies are predicated on divergence, buy and or sell divergences. Monster longs this morning off the lows of the 57.53. They rallied up to 58.20. Then a monster short pattern around the 11:30, 11:45 off the 15s, and they got absolutely kabooshed. I'm telling you, absolutely kabooshed. Wild day here. Let me tell you something. My community, I'm so blessed. So many people just knocking the ball out of the park. You know, being able to see the patterns, I'm able to identify the patterns. I'm educating them, guiding them, calling out the trades, making the trades for myself here, and a unbelievable day. You know, every day trader wants days like today, you know, and it's just amazing. We caught a short at around the 250 S&P futures. I blinked, they were down 20 points like that, okay? And they dropped another 20. So I can't wait to show you. But again, when you're trading this type of market, it's important to realize that, you know, you got to adjust your size. Maybe you have to also raise your stops as the markets are on the short at 250 in the afternoon. As it's dropping, I would just keep lowering your stops, covering and lowering your stops all the way down. So with that being said, it was another great day here. My community, I tell you, just trading up a storm. I can't wait for those of you who haven't joined my community to learn from me. This is what I want to be able to do and be able to help you, guide you, teach you, and help you be consistent and do well in trading and be a very, very successful trader. All right, so let me go and start showing you here what we saw this morning. So coming into the day, let me bring up the 30 and the 60-minute time frames. The first thing I said to everybody coming into the day was there was some buy divergences on the spiders and the Qs, okay? All right, on the spiders and the Qs. And if you see here coming in, we got this low right here. Now, when we got the low here, the S&P futures were trading at the 57.53 level. And when you see this type of low right here, okay, the MACDs did not confirm the low at all. The MACDs did not confirm the low. You can see the MACD did not confirm the low on the 30. If I draw my horizontal line here, right, it did not make a new low there, and it did not make a new low here on the 60-minute time frame. And what happened? Boom, we got a monster rally off that buy divergence coming in right after the opening right there. And you can see this pattern develop on the 30-minute time frame right around the 9:45, 10 o'clock. It just drifted sideways, and then it exploded. So the spiders ran from 573.45 all the way up. Look at that. That's almost 70 points on the S&P. 70 points. Then when we got this push up, I'm going to switch this to the 15-minute time frame. All right. So I'll move this to the 30. So we know that the 30, the 60, the 30, and the 15-minute time frames in sell mode. Look at this pattern. Okay, look at this pattern here. All right. You got an overbought condition into the negative MACD. So technically, after the 15 reversed to sell coming into today, all right, and you can see here on the opening right here at 10 o'clock, the 30, the 15, and the 60-minute time frames all reversed to sell, right? So what you look to do is you take a couple of shorts on the 5-minute time frame, right? But then ultimately you wait for the 15. That means we're in a trend. So I'll do this again, all right? So coming in, I knew the 60-minute time frames were bearish right here. You can see the 60-minute was bullish, okay? And then the 30-minute and the 15-minute time frame reversed to sell. I apologize for that, okay, right here. So that means now we have a sell disconnect. 2 out of the 3 time frames are in sell mode. And what we look to do, we look to short the first bounce on the 15 right here. S&P futures were trading the 58.20, and look at this move. One here, if you even want 1, 2, 3, 4, 5, 6, 7, 8 bars. Look at that move. Unbelievable move. From 580, S&P futures dropped 80 points. 80 points on that. That's a monster pattern. When the 30-minute time frame correlates with the 15, that's one of my favorite patterns, when the 30 is so powerful, right? The 30-minute time frame correlates with the 15, and then at the end of the day, the 60-minute time frame reversed as well. All right, so we'll see what happens for tomorrow. We have the employment number tomorrow, and we have some earnings out after the bell and some tech stocks. So we'll see. But a phenomenal pattern here. And so we had the buy on the first pattern at 10 o'clock that rallied, and then got the short right here on the 11:15 bar. Now, let me just bring you to something else. Let me bring you to the 60-minute time frame on the continuous contracts on the S&P futures here. All right, let me just show you this right here. This is the bounce we got. Look at the high here, 58.20. I'm going to bring up the 30-minute. I'm going to bring up the 60-minute. All right, look at this pattern here. Look at this pattern. Okay, this is a monster short. Okay, getting overbought on the 30-minute time frame into the negative MACD on the 60-minute time frame. You can't ask for anything better. So not only did I get the 15-minute time frame getting overbought after the 30-minute spiders correlated, I had the negative MACD on the 60-minute time frame. That's why I keep everything up and running. Again, it's all about preparation and being able to look at the market. When I saw the overbought condition, I knew the 15, that was the first bounce on the 15 after the 30-minute spider correlated with the Qs. The whole world was a short there, by the way. The whole world was a short. Right? Matter of fact, I said I would look to short the whole world. When I say things like that, forget it. Palantir, Microsoft, Amazon, Nvidia, Avago, everything lined up. Meta, everything lined up. All right, the diamonds, everything lined up. And then when you got that short, then I looked over at the S&P futures, the continuous contract on the 15, on the 60-minute and the 30 and the 60. I'm like, look at this negative MACD on a 60-minute time frame. The 30 is getting overbought. Where are they going into that negative MACD? You're making new highs on the day, and the MACDs on the continuous contracts are non-confirming. You're making new highs even on the underlying ETFs, non-confirmation sell divergence. So basically what you had there, you had a disconnect, one of the conditions, a disconnect with a sell divergence on the spiders, and there you had a negative trend, okay, on the you had a sell disconnect on the divergence on a disconnect on the continuous contracts as well. So with that, what really happened there was monster sell divergences there on the 60-minute time frame. The 15-minute time frame, the 30-minute lined up with the spiders on the 15. That was the first short. And then I go over there, boom, and I look. I see the negative MACD. And the MACDs on the 60-minute time frame are not confirming the highs. Forget it. Finished. Mort. Over. And then boom, kaboosh, right? Just dropped. Just completely dropped. Let me just show you what transpired at the end of the day here. All right. This pattern right here was a buy divergence right here. You can see the S&Ps were making new lows. I'll bring this over to the 15-minute. All right, we were all jumping up and down, knowing that the market was going to rally off this. We were deeply oversold on the 15, the 30, and the 60-minute spiders on the underlying ETF. And you're making new lows here, but the MACDs did non-confirm the low. I was looking maybe to go 16 and a half, 17 and a half. I kind of just overthought that just for a split second. And then ultimately, they ran from 20. Look at this. From the time of 2:30, they went from 20 to 68. 68 down to 27. Look at that. Unbelievable. Actually lower. Sorry, 23. 68 down to 23 and a half. 23 and a half, boom, up to 55. 55 down to 31. 31 and a half. 31 and a half, boom, up to 61. Okay? And just look at this. Boom. It's just unbelievable. From 2:30 on, there has to be here probably about 130 points in the S&Ps moving down, up, down. Unbelievable. Up, right, down, boom, up, down. It's just amazing. I can't even forget about the NASDAQ futures. If the S&P futures did, I think, probably about 120, 130 points, the NASDAQ futures probably did 500, 600 points. They were moving 50 to 100 points at a clip. This is a type of market a lot of people don't know how to trade, and I get that. However, in this market, in this community, we know what we're doing, and that's what my 41 plus years, almost 42 years of experience, and how I guide you, I help you, and they navigate through these rough times. But they're not really rough because, you know what? People are pulling the trigger. People are confident with the software, my ability, my skill set, my teaching, learning the software, learning the patterns really knocks the ball out of the park. All right. So I have show you, this is another great, I wanted to show you these patterns because, you know, they really are just unbelievable. I want to show you NVIDIA here on the 30-minute time frame to just show you. There goes Avago. Avago just earnings just came out up 10. Okay. Avago's earnings just came out. That's good for the market tomorrow, but we have the employment number. All right. Okay. So if you look here on Avago, on NVIDIA, you can see right here at around 10 o'clock, this 30-minute time frame. Now the 60 is still bullish, but the 30 reversed to sell, and it correlated with the 15. And again, look what happened. Everything's set up here. 10:45, 11. I call this great short above 115. Monster long here. Okay, a monster short. I apologize. Amazon, I'll show you the same type of pattern. Amazon was a little earlier though. I think it was around around 11, 10:45. Okay, you can see the 30-minute time frame reversing, and you get the bounce right here. And then when you see a rising ADX like this on the 30-minute and the 15-minute time frame, look at the great shorts that you had here in Amazon. All right, look at the great shorts here. When you see this rising ADX, right, look at the first short. Boom. Here's the first short on the 5-minute, the second short on the 5. Here's the first short. Let's look at another one. Here's another great short at 110. Look at the rising ADX on the 15 and the 30-minute. Look at the negative MACDs. Where are they going? Okay, Avago off the last sale is up 13 off the last sale. Okay, our S&P futures rallying up here now. All right, so you can see right there that this is a phenomenal pattern. All right, phenomenal pattern. All right, and you can see you got one short, two short, three shorts, right? Unbelievable. And if you go to the 15-minute time frame after the 30-minute, this is the short right here. These are great patterns. When the SDSs reverse to buy here, right here, when the SDSs reverse to buy right here at around the 10 o'clock, this is when you get the algorithm reversing to buy into the negative MACD. This is why I knew the market was going to rally as well, because if I put up the spiders, when the spiders reverse to on the 15 here, you're making new lows. The MACDs did non-confirm here on the 15 to 30 and the 60. That's why we got that big 70 handle rally push up. okay, off that 57.53. So going back to the SDSs, once the 15-minute time frame reversed to buy right here, that's the 30-minute. Once the 15-minute reversed to buy, okay, you can see then what we're going to able to do is take advantage of looking at the 5-minute time frames right here and looking at these pullbacks right here. These pullbacks set up great shorts on the S&P, all right, and on the spiders. And then beautiful pattern here on the 15-minute time frame when it got oversold. Again, that was the overbought time when we got short the market as well, all right? S&P futures pushing up here well off the lows. Look at this. Avago is up right now about $14 off the lows here. Avago. That was another great stock today on Avago. If you look at the opening here, I caught some really great longs on Avago on the 30 and the 60-minute time frames coming in. Great buy divergences. You push down here into the positive MACD on the 60-minute. I bought, look at this, 177.61, and then it ran. Look at that. Look at that. It ran $9 on that. Monster pattern on Avago. So Avago tomorrow looks like it's going to be a good stock to start trading here. All right. Tesla, again, Tesla reversed to sell on the 30-minute time frame. You can see right here. And then what are we going to look to do? We're going to look to take advantage of the 15-minute time frames that lined up beautifully here. This is the short. You can see how everything lined up. Just throw a dart. You see the rising ADXs here. Now, when Tesla reversed, everything reversed here on Tesla on the 30 and the 15, we go to the 5-minute time frames right here. And you can see here's the 5-minute time frames aligning with the 30 and the 60-minute time frame. Here's a short. Here's another short. Here's another short. Okay. And this is the push up here that just was wild. Okay. Which we called the short on the S&Ps. And you had probably 3 or 4 really great shorts on Tesla. All right. Let's see here. Lilly, LLY, another great stock to trade today. Lilly reversed to sell on the 30-minute and the 60 and the 15. And you can see Lilly right here at the end of the day got the push up. Now, Lilly has a major bear flag coming in here, all right, coming into tomorrow. So we'll see what the unemployment number comes out with. But Lilly, you can see here, is negative right now on the 30-minute, is negative on the 60-minute, all right here. And you got a major bear flag here on the 60. However, we're going to wait, and you can see how the 15-minute time frame, when they have this rising ADX like this, great shorts in Lilly. They were on off the 5-minute, 512 drop. Look at this. If you look at Lilly after the time frame reversed on the 30 and the 15, you can see this is the first bounce on Lilly right here. 912 again, and look what it did. Boom, it dropped $7-8, pushed up again about 910. Again, using the 10-bar weighted moving average as a guide, and you can see the push down right here. Monster short. All right, monster short. When you see the Russell, the 30-minute time frame, again, these patterns repeat themselves. The 30-minute reverse to sell, the 15, boom, reverse to sell. Here's the push up. You can see this is the bear flag. And then at the end of the day, when the 15 reversed to sell, you got the push up on the Russell, 206.93, and the drop. Again, right now we have sells on the Russell on the 15 to 30 in the hourly. So we'll see what happens tomorrow. If you look at the S&P futures or the spiders on the daily time frame, this is what I'm expecting here. You can see we're 19 points from the 10-bar weighted moving average. I still like to see this oscillator right here, all right, get down to single digits, all right, before we can get any type of a bounce. This top here is not going to be met for quite some time, like within several months, I don't think. This is a real negative pattern here. Even if we do get a push up here, the thing that's you got to worry about for tomorrow here, all right, is the weekly chart. If the weekly closes, if the spiders close, look where they are right now. Look at this, 574, right there, 52. Look where we closed. If we close below this number tomorrow, if we close below this number, the weekly will reverse to sell on the spiders. Look how long we were in this uptrend for. Look at this. Since December of 23. That's bearish. Okay, that's bearish. But you can't take away the fact that the monthly is still very bullish. I don't think we're going to get to the 5,300 level. All right. But it's going to, if that happens, the market's going to have some tough time. All right. There'll be some great oversold rallies. There'll be some great bear flags setting up on the dailies, but a lot of great patterns. No matter long, short, it doesn't make a difference. But that number tomorrow, if we close below that number tomorrow, look out below. We'll get some type of a sell. We'll get a push down. All right. And then you'll get like a 90 to a 200, 250 point rally on the spiders or the S&P, set up another short, a drop, and this will go back and forth, back and forth, back and forth. I think we'll be in a good trading range, maybe 54.50 up to 5,900, and then ultimately, boom, we'll start turning up sometime in the third quarter. That's what I'm hoping for, and I think that's what's going to happen coming into this is the way, especially during the summer months. I think the summer months are a little bearish here, and I think that we'll have extreme oversold conditions, and we'll have some, vicious declines, but like we did. But we haven't seen this in the last couple of days. So again, right now, wow, NVIDIA, Avago is up, 15 points from the close. All right, Avago looks like obviously the earnings much better, obviously, than expected. So I think this is going to give a good undertone tomorrow. Now, if you get a great unemployment number, well, that weekly is not going to flip negative, right? And we'll probably get a push up to maybe the 5,850, 5,900 level. But even if we get a push up, we have such a ton of overhead resistance on the daily charts. It's just going to make a really tough climb. 6,000, I don't see it in the cards right now. Maybe we get up to a racing. If you get 20 up from here on the spiders, maybe get up to the 592, 595 level. So maybe the 59.5 level on the S&Ps. But I don't know right now, 59.50, 59.30, but let's just take one day at a time right now. But I don't think 61, 66 is going to be hit, and I don't think the 6,000 is going to be hit. I think it's going to take a lot of backing and filling and several months of pushing down rallies, and before the weeklies can turn right back up. And once those weeklies turn positive again, and they correlate with the 60-minute, with the monthly, then I think we're going to explode to the upside. All right. So when I come back, I will tell you what I'm expecting tomorrow and how to trade it. So we saw a really big rally off the lows, 57.20. Everybody's talking about this 200-day moving average. If I had $1 today for everybody who talked to me about the 200-day moving average, I could retire, okay? I don't really care about the 200-day moving average. It doesn't do anything for me. We trade what we see, and that's it. I'm not looking at a 200-day moving average. The whole world, right? Somebody said to me today, well, Steve, if they break below the 200-day moving average, don't the funds have to get out? No, I don't believe that's the case. Every fund has their own guidelines or whatever, but I think hedge funds are just looking to make money no matter what, long and or short. Okay. Wow, look at this Avago go up 16 from the close. All right. So what I'm looking for tomorrow. All right. If the Avago is a big help here, especially for the tech stocks. All right. Right now, NVIDIA just rallied about $1.50. This is what I'm looking for tomorrow. If we get a bad number, in employment number, and we get kabooshed, all right, I'm still going to be looking to buy the deep oversold conditions on the 15, the 30, and the 60-minute time frames, because when you have an almost near oversold condition on the dailies, all right. If that daily gets to single digits, right now we're at a 22 on the oscillator, which I just showed you. If we get a push down and we get to a single digit number, like a 9 and 8 on the daily, I'm telling you, I've been doing this almost 42 years. Expect a very sharp bounce here. All right. I'm not saying that it could be the same day, but within the next 1 to 3 days. The way to play this now is in order to get a buy reversal just on the spiders on the 30-minute time frame, the S&P futures need to rally 60 points from where they currently are. Let me show you. 578.55. We closed right here, 574.51 in the after hours, but we closed really around. So let's just say we'll take this number here, 573. I'll round it out. So right now we're 55, so about $5.55, $5.55. So that means currently the S&P futures would have to trade up to the 50. Let's see here, 57, 65 plus 55. Yeah, you're talking like 58.20, 55 points up in order to get a buy reversal on the 30-minute. On the 60-minute, you're 70 points away. So that means you'll have to take out like the 58.35, 58.40 on the S&Ps in order to get buy reversals here, that's pretty steep to be up 60 points, 55 to 70 points on the underlying ETFs. That means the S&P futures, like I said, 58.20, 58.35, 58.40. That seems pretty staggering, okay, to be up 70 points, hang up there, and then get these buy reversals. On the QQQs, we need to take out the 495.37. That's about 5 points away on the 30-minute, and on the 60-minute, 597.32. That's about $7 from here, which, we're down 11, so 7 should be nothing. However, if these conditions reverse, then we would look to buy pullbacks if the number is really super bullish on the unemployment number. If the number is bearish and they get absolutely kabooshed, my eyes are going to go to that daily. I'm going to look to see if there's any single-digit numbers, and then I'm going to go to my 30 and 60-minute time frames and see if those numbers get to significant oversold conditions, and I would be looking for buys and just keep trading them from the long side, and then ultimately see if we can get some type of a rally off the deep oversold conditions. Avago, obviously, I'd be looking to buy pullbacks tomorrow, being up that it's now up 16 from the close. It closed at 179.33 in the pre-market, in the post-market right now. Is trading 195.76. All right, so that's what I'm looking for tomorrow. Let's see here. MSTR and Coinbase are still in buy mode on the 30 and 60-minute time frames, but very close to reversing here. So we got to keep an eye on those 30-minute time frames on Coinbase and MSTR. If they reverse to sell on the 30s, I would look to short bounces on the 15-minute time frame going into tomorrow. All right. If they reverse, that's the plan. I'll be looking to short during the trading hours. All right. When I get back, guess what? Another story I got from somebody from last night's call. I'll be right back. I just love doing this podcast because, I talk to so many people around the world. My phone blows up after people watch the podcast and tell me about the trading day, and they text me. So last night I'm doing a call with someone, and I said, let me just talk about this tomorrow. And there's about 1 million traders in the world that sit in front of a screen around the world, right? Who just can sit here and trade all day long and make it a livelihood. All right. And obviously what I'm looking to do also is not only just cater to this type of group, but also cater to those who are professionals, where I'm building automated signals for people to get on their phone and using my algorithms to be able to customize their own portfolios. And that's a few months down the road, but God willing, this all comes to fruition, and I'm working with some very, very skilled people to build this, right? But right now there's about 1 million people who can sit in front of a screen each and every day and trade the market, okay? In order to do this, right, invest in yourself, all right? Some people are trading with one screen. I don't have to have 45 or 50, okay? All right? You don't have to have that. But if you have, 6 screens, if you're trying to trade the S&P futures, you look at the one screen on the 5 and 15, the spiders, the 5 and the 15, and then the 30, 60-minute time frames on the continuous contract, underlying ETF, and maybe you put up the STSs as well, right? But in the end, what you want to be able to do is invest in yourself, get the right setup, all right? People will tell me, well, I got one screen or two screens. I'm flipping back and forth. I'm missing everything. Okay, well, I said, I can't tell you what to do, but if it was me, I would invest more money, buy yourself a couple of screens, get a video card, add 4 more monitors maybe. If you have 2, go to 4. If you have 4, go to 8. If you especially want to trade more stocks, because the more you watch, the more you see, the more you learn, right? Because everything I do is based upon visualization and repetition. So again, the little message for today, after talking to that person last night, invest in yourself. If this is what you want to do and you love doing it and this is your livelihood and you want to be able to take this, even if you're doing it part-time, invest in yourself, get the right setup. And that's, to me, it makes all the whole difference here. It's going to open up your horizon. It's going to give you the ability to see patterns a lot clearer and see them as things are happening. As I'm talking and explaining what I'm looking at, then you can be able to see it right there. And that's how you're going to learn and pick it up quicker. All right. Please subscribe to my YouTube channel. Leave a comment. Follow me on X at Steve Kalajian. And join my community. Anybody can reach out to me at 914-500-7484. Let's see here. All right. So employment number tomorrow at 8:30. Avago, beat up 16. Going to have some nice trades in that tomorrow. I already told you what I thought that's going to happen tomorrow. Employment number, big red number. So we'll watch it there. God bless everybody. Be consistent. Remember, use your stops. God bless you, and God bless the United States of America. Be well, everybody.
Thanks for tuning into the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.